So prices are on the rise with wholesale inflation climbing more than expected in the month of July. This is the latest producer price index, revealing a 0.9% jump last month, more than triple the expectation. Biggest jump in 3 years. You look at 3.3% right side of your screen year over year. Doug Flynn, certified financial planner and co-founder of Flynn Zito, joins us. You know, so we've talked about it even on the consumer side the other day. It's like, oh, is this the tariffs? What I would say, Doug, and you can tell me if I'm wrong about this, is that the tariffs are not helping. They may even be hurting a little bit, but they're not the whole story. Like, for example, services costs actually advanced more than goods on the month. So what is the whole story here?
Yeah, that really is the story here. If you break it down, this is a big jump. There's no question about it, but that's the headline number. You do have to do a little bit of work in there and see that if you break it down into goods and services, the services were up 4%, but the goods portion was only up 1.9% year over year. And if you think about it, the tariffs are going to be on the goods. So if tariffs really having an impact, we would certainly expect the inflation rate on the goods portion to be much more than 1.9% year over year. In fact, the last 6 months, inflation for goods has only been 0.7% year over year for the last 6 months. So it's not having an impact yet on that, but services has certainly increased the costs. Some of that could be an easy excuse to raise prices on things, but it hasn't worked its way into actually affecting things yet. So overall, if this continues, then it becomes more of a concern. But other than that, 1 month's outsized number doesn't really change the overall trend of the fact that it's still on a lowering kind of a scenario, and that's what we've been on for the last 6 months. So,
but there is this question about, even if the tariffs do pick up and affect things, or its services, or whatever the case, but if prices are going up for whatever reason, but especially if they start going up more for goods, do companies continue to eat it? Okay, the president said that, you know, said eat the cost, or, and they have been in a lot of cases, or do we start to see the pass along if the goods start to rise?
I think you definitely can eventually see some of that pass along. We've talked about it before, where if there is a tariff increase and we're settling in and around 15%, let's say that's the going rate for a good deal. You know, if that's how it shakes out for most places, then the 15% is on the import cost. By the time you get it to retail, it could be half or even a quarter of that actually works its way into the retail price. So there is an impact. They can absorb some of it. Some of it may get passed along. But whether it's a long-term thing, we don't know. So they're banking on the productivity and everything else increasing and wages increasing and all of that, tax cuts, more than offsetting that to make up for it. And then the country makes more money and everybody's in a better situation.
Let me run, Doug. I'm sorry to cut you off. I want to get the closing bell in and our top stories at the top of the hour.